Hey folks, see Rachana Ranade here, and I welcome you all to a very informative video. Right? Today's video is more about the Russian Ukraine war, but rather than just their war, it's more about the financial war that I want to focus about in today's video. In fact, you might have seen in the thumbnail that is there some financial bomb that has the capacity to really impact your portfolio. So this video is not to scare you, but this video is to put certain facts in front of you. After you listen to the facts, you can take your own decision. I'll tell you what my thought process behind all these things are, right? The very first point I would like to highlight you is that the 10-year Russian bond yield that closed at a record high of 19.7% on 4th of March. Why did this happen? That was because of fear of default by the Russian government. So what I'll do is I'll quickly share my screen and I'll tell you how to see this data point of just give me a second. Chrome tab, Russian yield and share. All right. So here you can see, I'm just zooming in if this is possible. Right. Okay. So this is 4th March, right? 4th March, it closed. High point was what? High point was 19.89% almost. Always remember, whenever bond yields are going that high, so Russian government bond hai ye. So is it considered to be safe? Yes. Is it considered to be something where the chances of default are comparatively less? Yes. Any country's government yield is generally on a lower side. Okay. And if you see here, this has gone at 19.89%. Okay. This happened on what? 4th March, when people were fearing recession. And then after 4th March, next candle you can see 21st March directly. Point. Now you'll be like, what happened? 4th March to 21st March. Why can't we see candles in between? The reason was that the bond market, in fact, stock market also, was suspended between these dates. Okay, that is the reason why you'll see directly after 4th March, we have 21st March. And 21st March, when the bond market opened, you can see the yields fell down to almost 14 point whatever 15 percent, right? Now the big question is, if it went up so high, question is why did it actually go down, right? So reason is very simple, because when people were fearing inflation, it had gone up. But when a Russian government made a payment, okay, how much payment did they make? They made a payment of $66 million of coupon payment. Coupon payment is like interest payment on what? On a sovereign bond which was maturing in 2029. So just to sum up quickly, why did the bond yield go up terrifically? Why? Number one, because people were fearing that there could be a default. Did this happen? Answer is no. On 21st of March, Russia actually honored its payment of $66 million coupon payment, which the bond which was maturing on 2029. Okay, till here, fantastic. Now, is this over? Kahani khatam. They have honored. No, wait. Russian Federation held $490 billion in external debt in 2021. This is yet a debt which is to be repaid. Okay, data whatever I've taken is as per Bloomberg, so I think it's surely reliable, right? Interest expense on that debt is almost $490 billion, and this fluctuates. Oh, sorry, interest on this debt of $490 billion is around $100 billion per year. So it fluctuates almost $100 billion per year. So I'm repeating quickly. How much is the debt amount? $490 billion. And how much is the interest payment on that? So I can say interest expense, right? Interest expense is accounting to almost around $100 billion per year, and that is keep on fluctuating. Now, is there any other payment which is due in the coming future, in the near future? Yes. Country further owes $549 million in coupon this month. 549 million is to be paid just as a coupon amount this month, while a $2 billion bond must be repaid on 4th of April. This 4th of April, coming 4th of April, and more than $4.5 billion in coupons and maturities are due by the year end. Oof, is that scary? Answer is yes. Okay, a lot of repayments are yet to be done. Am I saying that 100% there'll be a default? No, 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 not at all. I'm just telling you what the position is. Now I'll share you some data which might blow off your mind. Okay, so I'm again sharing my screen for your benefit so that you get to know what I'm talking about. Okay, so I've shared my screen. I'll just do a slideshow. Now, if you watch this specific data point, you can see that the Russian bond yield, 2-year yield, is how much? 2 year yield is 14.96%. Okay. And if you see a 10-year yield, that is 13.76%. Oops, what is this? 2 year yield at 14.96 and 10-year yield at 13.76. I'll tell you the thumb rule. Thumb rule is that in the near term, generally the coupon is lower. Okay, coupon interest rate you can say is lower, and in the longer term, interest rate is higher or the coupon rate is higher. When we see this in the ulta, it is happening in the reverse way. We call that as an inverted bond yield. Inverted bond yield means what? Coupon rate is higher in the short term and lower in the long term. What does this signify? If coupon rate in the shorter term, say 2 years, is higher, it means that people are not sure whether there'll be a default or not. Whenever there is a fear of default, the coupon rates will be higher in the short term, right? Now, what we have seen in history, if this inverted bond yield happens, then many times we have seen this in history that such an inverted bond yield is followed by recession. Okay, so is there a chance, if history repeats, could there be a possible recession that could come in the coming years? Possibility is yes. Now you might be like, what is the big problem? Okay, we understood that there is an inverted bond yield, da da da, whatever. There is one more big problem, that whatever repayment they have to make, whatever billions of dollars that I told right now, all these are to be made in what? In US dollars. Currently, what currency they have? Russian ruble, right? Now, converting ruble into dollars is a big problem for them. To transfer that money, the SWIFT system is required. And currently, if you know, Russia has been, expelled, taken away from this SWIFT system. So for them, again, that's a big question mark. How are they going to convert these ruble into US dollars and then make the repayment? In fact, when we also purchased crude oil from Russia, we have again made the payment in what? Rubles. So all these things taken into consideration. So let me just quickly sum this up. Number one, we said that the bond yield was terribly high, almost 19.7%. From that, it went to almost 20% and then cooled off to 13.7%. Yield was high because of the fears of what? Fear of Russian government defaulting on the interest coupon payment. Did that happen? No. As of now, no. But are there any upcoming payments? Yes. This month itself, the amount to be paid is almost $549 million. This month, $2 billion worth. This month, that is 4th of April, coming month, $2 billion worth bond needs to be repaid. And with all these things into picture, payment in US dollars, this is going to be, I am a little bit skeptical on this. Again, let me repeat my point. Am I here to scare you? No, I'm here to put certain facts and figures in front of you. Let me know your thoughts in the comment section. Let me know if you enjoyed this piece of hardcore economics, and if you want me to make a much more detailed video on this, focusing more on economic perspective or aspects. Do let me know in the comment section, and I would be more than happy to cover some additional video on this Russia Ukraine thing and how it can impact in the financial terms, right? So I hope you enjoyed this short and sweet video. Till then, take care. Jai Hind and bye bye.